very quickly, and then we're going to move right to the subject matter because nobody wants to hear me. You came to hear Dan. So view this, use slideshow. All right, so as I said, a monthly program called Deep Dive Webinars. This one, we played with the name a little bit, but how QuickBooks can help you make better business decisions is where we landed on it. But the reality is QuickBooks is ubiquitous. Everybody's using it, but not everybody is using it well. And that's where Dan Putignano comes in. He is the co-owner with his wife of, it's called Ms. Management because he's a feminist organization. And he's been a longtime EforAll mentor and helped us with an Ask the Experts program. I will be the facilitator and asking good questions. Now, here, this is the format of what we do is Dan's gonna talk for about an hour, and he also did not bring a PowerPoint. He's gonna show us QuickBooks, gonna show us some reports, show us some of the things he's learned. And after about 45 minutes to an hour, we will stop the recording. And that's your chance to ask your questions. You can even bring up your QuickBooks if you want, if you're feeling brave enough to share with everyone, or you can ask your own question. But I know that QuickBooks is quote unquote self-service. You're supposed to be doing it yourself. Well, we also know that it may not really be serving you, or you might not be servicing it yourself very well, which is where Dan comes in. He'll tell you more about his background in a minute. Let me just start with a thank you, because I always thank the folks who sponsor EforAll here in Berkshire County, because if they didn't sponsor us, we wouldn't be able to offer you these terrific programs for free. So thank you to our sponsors. Some of you may be new to EforAll. What is this thing? I just saw something on Facebook, or someone sent me an email and said I should do this. EforAll is all about helping under-resourced entrepreneurs bring their ideas to life. These statistics are actually a year old, but over 1,100 businesses have been started by our alumni in all the different markets that we work in, helping many people who were previously unemployed, and woman-owned, BIPOC, immigrant, previously unemployed. And we are just so proud of the work that we're doing. And it's why we created these deep dives to help you be more successful. We do them every month, usually on the third Monday from 4 to 5:30 in the afternoon. I know we have some folks who join us from our Longmont affiliate and our Northwest Arkansas. So I always try to do it late in the afternoon so that they can also pick it up out there. The September deep dive is going to be a panel about food business and best practices and what we've learned. Here's the funny thing about this is I can't get any of the food business alumni to commit because they're all too busy running their business. But I promise you, I will round up a panel of food businesses and they will be joining us. And hopefully it will be a very informative lesson for anyone who's in a food related business. Kimberly, you make a food. Maybe we'll get you on this one. And let me just point out that all of our EforAll deep dives are archived here, and you can at virtual-workshops, and you can check them out at your leisure. Again, 1 hour of presentation, and then we'll do open Q&A. And without further ado, I'm going to let Dan Putignano take over.
Thank you very much. Thank you, Deborah and Allison, for facilitating and putting this all together. Pleasure to see you all here today. I'm sure everybody can hear me okay. Yes,
we're good.
Good, and see me all right. So, the important question of today's deep dive is how to make QuickBooks. How QuickBooks can help make smarter business decisions. That's a very broad type of idea, and we can approach it a number of ways. The most important thing in talking about how QuickBooks helps us make better decisions is to understand what information QuickBooks is tracking and making sure that we're tracking it properly. If we're tracking information, it's data. If we're tracking it properly, then it's about how we look at it, how we get the information out of QuickBooks to help us make business decisions. There's a couple of very most common things that I find with the business owners that we work with. First and foremost, let me do a quick share screen and just point out who we are. Ms. Management, my wife started this business for herself almost 19 years ago, over 19 years ago. And I joined in 16 years ago, just a few years after it was doing so well. And both of our backgrounds worked together to help entrepreneurs, new business owners, and existing concerns streamline, get the most out of their bookkeeping, and help their CPAs with improving the visibility and the communication between the business owners and the CPAs, and helping exactly do what this webinar is all about, helping those business owners make better decisions when it comes to their taxes, when it comes to their personal finances as a result of the results of their business, and of course in the operation of their businesses, because finance, where we live, finance and operations go hand in hand. One is the result of the other, and in return supports the other. There are so many different types of businesses, not only that we've worked with, but that exist. So there's so many different ways in which these type of techniques and processes that QuickBooks allows us to control and manage, there can be used. There can be many different ways to get this information and make it useful.
Dan, would it be helpful for you to know what kind of businesses are on here? I can ask them to put that in the chat, and maybe that'll help inform the conversation.
I think later on, when it comes to, if there's any questions asked, I think it'll be helpful to know at the time.
Okay.
So I will definitely cover in the things that I'm discussing some very common business types, and there's a couple of major categories. So yes, we'll hopefully cover as many bases as possible, knowing that QuickBooks is a tool that is meant to mold to the needs of the business that's using it, and that's why it's important to have people like myself in support of businesses to get the most out of. Many business owners are very good with the finance and the numbers and keeping track and managing. There does come a time, hopefully, where their business is so busy that is not where they're spending their time best, and that's the key thing as a business owner and entrepreneur, is you need to spend your time building business, making bigger decisions, and at some point it hopefully will become necessary to engage somebody like myself to be a support, or if you have an admin that's already working with you, for them to handle some of those tasks, so that you can spend more time as a business owner working on your business instead of working in your business. That's a key thing, that having the right type of support. You'll always need help running your business. You can't do it alone. And there's a couple of different areas depending on the business, but obviously finance and accounting is right there from day one, going to be a really important thing. So a couple of the main areas where best examples of where QuickBooks can help make smarter business decisions, in a very general sense, is, I hear this very common all the time, is that smaller businesses, when they start, they don't have employees. They may be just solo entrepreneurs, solopreneurs, we call them. They're self-employed. And over time, though, business owners will work with other consultants if they're in a service business, or they'll need to add hands if they're in a product-based business. And usually they'll start off with paying people without it being using a payroll service and without managing and all the things that come along with running a payroll. And at some point, the business owners will ask the question, when is the right time to move from somebody being a 1099, a W-9 person, to a W-2, W-4 person being on payroll. And that's a very common thing that QuickBooks is always the best place to go to, because it will give us a very quick look, as long as it's used correctly. And I'll get into this in a minute. Very easy, quick looks as to how the numbers look as to whether it's worthwhile. Getting business funding, for a line of credit with your bank or from an SBA or other community lenders. That's another very common way in which QuickBooks is the go-to. It is the best and really only way to be able to take advantage of funding for growth for your business, because it's going to be based on a combination of performance of the past, projections for the future, and also having a very clear picture for underwriters and people who are going to be interested in giving funding for business owners, giving them what they need to see to understand the basics of how the business is operating financially and operationally as well. Another important area as companies grow and change, we know we've seen a lot of growth and change happen over the past few years, as stability has been very hard to deal with in the COVID and post-COVID era. Understanding changes to revenue streams comes from having very good capturing of that information, and that's where QuickBooks comes in as well. Because let's just talk about QuickBooks and what it is and why. And I'll very quickly share going to a QuickBooks file that I run for myself, and the chart of accounts is what is the basis of the accounting system. And what is the chart of accounts? Well,
can you make it bigger? I can't.
I'll
really
try.
see what
Yes,
you're doing.
yes, I'll try. Here we go. Hopefully that will help as things get bigger.
One more.
Sometimes they get compressed. Do I get more?
There you go.
Better?
Now I can
Beautiful,
see it.
beautiful, beautiful. Thank you for that. So the chart of accounts is the skeleton upon which the financial life of the business hangs. I've used this metaphor in the past. When you think of your business akin to the human body, it's got the brain, which is usually you, the business owner, or the corporate suite, if it's a bigger, larger corporation or whatever. And it's got the muscles and the bones, which is usually the products and services that that your business is offering to the public or to other businesses, etc. And money is the blood. Money is the blood, and your accounting system is your circulatory system. It's tracking and moving the money to all the different places it needs to go for you to run your business. If you're someone who does a product-based business, if you're a restaurant, let's say, you're taking in materials that are in one form, you're converting them into plates of food that get delivered or served. You have to deal with other types of supplies that are not something that you hand off and give away, but you still have to manage and maintain. Restaurants are very complex in this way. The famous collegiate business 101 model of the Acme widget company is very simple but very effective. That's why it's always the fallback for a business teacher. Making something out of something else and then selling that something is a very easy way to manage and understand. In this world, we have service businesses. Like I've said, we have so many different permutations and possibilities. All of them have the one thing in common, that the money that is flowing through them, that is the life of that business. And as long as that money is managed and measured properly, then you have a healthy business. The chart of accounts, that is where all of the money that flows through the company is tracked. It's always good to give business owners, if you're all dealing with QuickBooks yourself, or some people are even using, Excel for when they start out, or whatever program you're using. Maybe it's something that's proprietary for your business that has accounting module or services with it. Understanding the chart of accounts is about understanding every aspect of the business. It all goes back to 5 basic categories, which is the assets of the business, the things that it owns, the cash in the bank, or the product that it has purchased that it's going to resell at a profit, let's say, for example. The liabilities, the money that is owed to other people. So if I, bought a big piece of equipment that I have to pay off over time, that's a liability that's going to take time to chip away at, right? The owner's equity, which is at the end of the day, the difference between those two things, which is the value of the business, the greater value of the business. And then on top of those 3 things, you have the revenue and the expenses, which is the action of what's happening in any given time period, usually the year you're in, or the previous year, or the next year. assets, liabilities, owner's equity, which is, like I said, the value of the business, revenue, and expenses. Revenue is the money you take in, expenses is the money that goes out. All of the things that happen on this chart of accounts, these are all different headings and categories. If any of you have looked at a profit and loss statement, then you've seen some of these things. A profit and loss statement is just the revenue and expenses. And if anybody has ever looked at a balance sheet, then all the other things I talked about, the balance sheet is made up of the assets, the liabilities, and the owner's equity. Those are the balances that are tracked on a balance sheet. Okay. So with all these basic ideas in place, and we'll have time for questions a little bit later, and we can go back to any of these things that you want to discuss, as simple or as complex as you want them to be. Understanding that this chart of accounts is here, and it's what makes all those other reports work, makes it very important to have a chart of accounts that is streamlined. Streamlined means two things. Simplistic is not good enough. It has to find a sweet spot between simple and useful, right? I have a couple of P&Ls here on this. Let me get this, there we go. That I have saved here, and they're look at a couple of different things about how they are good and bad, right? Here's Pretend Partners profit and loss for 2023. And just to take you through it quickly, we can discuss these things more if needed. It's for the future. It's, like I said, it's pretend, but they have information about their sales. Their sales is one giant bucket of information. And I know it's pretend, it's the future. We're going to pretend that this is what's happening now. And then all of their expenses are broken down with a bit more detail. For this pretend company, that might be okay. They might have a very, very simple sales process and they don't need to know. But generally speaking, that's not something that is going to be useful for many businesses. They're going to need to have a bit more detail about what kind of revenue they're generating, if they have multiple products, if they have different types of revenue. Some of it is let's say they sell something and then they also provide services to maintain, like a copier machine, business machine, or anything that's big and expensive and requires, future maintenance. The business machines are the most common example. Somebody in that situation is not going to get good value out of just one general number. They're going to want to be able to see the information broken down into pieces. One of the things I'd mentioned earlier about how we use QuickBooks to make smart business decisions is about tracking and understanding your revenue streams when they're really uniquely different. In the case of this company, they're not. It's very simple. But one of my clients, for example, that does they make custom furniture, high-end custom furniture, and they make that furniture for a couple of different industries. So what would be important to them is to understand not just how much they're selling in furniture, but how much they're selling in the furniture that they sell to hospitality and hotels versus offices versus private residences through, interior designers or that kind of thing. So that's a place, for example, where.
So if somebody, for instance, sells some on e-commerce and some through farmers markets and some through a retail outlet, that might be how they break their sales out.
Absolutely. That's exactly a great example. And that's another client that I have that is in that exact position where we made a point of showing them, and I'll give you an example of how that information can be helpful. Because we were able to break their sales into those different categories and identify specifically what it was they were making from farmers markets, then they were also able to identify what it was costing them at those farmer markets. They could easily see that farmers markets were helpful from a marketing perspective. So not a bad thing, not to stop doing them, but they were not a volume or profit generator, but they were important for marketing. And so that in the terms of any conversations about expansion or, again, financing, or also who they hire and how, it became very clear to understand that they want to maintain very tight control over their costs for the farmers markets, whereas in other parts of their business, the more money they invest in it, the more they will get a return. Farmers markets for them, it was very flat, but the benefit was more in the product awareness and the relationships that they were building with local restaurants, let's say, or whatever the case may be. So that's a fine example. And we can come back, like I said, to that later on with more, anybody that has questions relating to that. Going further down this profit and loss statement, and seeing, like I said, where the income is very simplistic, the expenses here is pretty good. Everything is in a pretty good place because the categories are specific when they need to be. Here's office expenses. Office is too general, but then there's subcategories about equipment rental and recruiting and computer and internet in particular, business gifts. Depending on the business, some of these categories are not required to be in any one specific place. In certain cases, they might be better in other places. Like business gift might be more of a marketing effect than just an annual thank you to clients. And some, based on the amount of money that is spent and based on a marketing budget, somebody might prefer to see that. But that's the point of going back to my original conversation about thinking about the chart of accounts. It's about being optimized for your business and not that there's a single right and a single wrong. There are some definitely clear wrongs. I'll show you examples of that in a little bit. But it is having at least a CPA, or if you work with somebody who's a CFO, or if you have financial professionals with access, or somebody like me, they can very quickly, discuss with you how your business operates, compare it to your chart of accounts, and then make good suggestions about how to change it for the future, for the next year. You don't want to change two things too dramatically in the middle of the year, but for the future, you want to prepare for it to be charted in a better way.
Dan, can I ask a question that I think connects for EforAll entrepreneurs?
Yes.
When we teach them back of the envelope, we talk about fixed costs and variable costs.
Mm-hmm.
So all of them seem to be lumped here under expense. But for instance, a rep commission is probably tied to an actual sale. So it's really a variable cost. But for the purposes of what you're doing, it's all getting put together. Is that right?
In the case of this example, this is what was already there. I took an existing example, and that's the way it was set up for them. And for them, it did work. Fixed versus variable is important, and I know where it fits into the EforAll program since I'm a mentor. And for many particular types of businesses, it's important that they're separated. In the case of this business, their commissions paid was really always a function of their sales, because they only ever generated sales with a rep, through a rep, and therefore a commission was always tied to it. And so in that way, there were less, the variability was less in terms of its percentage as compared to their sales, which is why another way to do this would be, and in the other example I have, that it is done that way, where commissions are most often usually shown as a cost of goods or a cost of sales, right? And a lot of those things that are variables, like in the case of a restaurant, for example, those things that are variable costs will be put into a cost of sales. There'll be a second, another category. Cost of sales is a subcategory of expense. It's still expense. It's still money moving the same way, but it does give it that extra subtlety, so that when you are product based, you can get an important number that you'll need whenever talking about the performance of your business. They'll always talk about your gross sales, and then what are your net sales after you subtract the cost of the goods, because you are, that's a certain amount of the money of what you're selling that is already gone. And so your gross sales are important, but then your net sales are also important to see that you're making a healthy margin, and that healthy margin is what allows the rest of the business to have investment capital with which to invest and grow, or in the case of getting funding, understand the need for it, etc. So thanks for that question, Deborah. I'll go and for pointing that out, the connection there. Looking back at where I was saying with like office expenses, things can get more specific, and that's a good idea. there's it's bad for things to get too specific. I'll go to the example, bad example Inc. Just for a couple of things. Much of this is fine. This is actually an arts agency, but they're similar to selling a product, but they're selling is other people's time. But in this case, because of what they do actually use cost of goods. And I know these numbers are big, but they're small. They're still considered a small business. But for their total income of $4 million, 2.7 of it goes to the costs of that time, what they have to pay those artists. I don't want to go too deeply off on the side there. Really, what I have in here to show as an example of something that is bad is here for their professional fees. And the professional fees are usually the lawyers and the accountants and other people like that are necessary for their businesses. They make the mistake of actually identifying specific businesses and specific people here. That's a big no-no that you want to avoid. It's nothing about that anybody looks at it and has a problem with it. Is that you want to, again, always find that sweet spot of how much information is important and valuable and what is not. What's important is to know what your legal fees are. And, here you have both a CPA and a bookkeeper. Those things should probably be together in one line because it's all your accounting fees. Some people like to see them separately and may have a good reason. It may be the similar thing between fixed and variable, that their CPA costs are at a fixed agreement every year, but their bookkeeping they use seasonally, and so they want to always keep an eye on it not getting out of hand, or if it does become more expensive, why. But you can apply those ideas to anything that you're talking about. This, insurance is something that goes up every year, and some types of insurance go up more than others. Here's this company has their insurance broken down into a lot of detail. I would argue too much detail, because some of the things that they're doing here, like liability insurance is good, disability is part of their payroll benefits, same with workers' comp. It's like some things are related to payroll, some things are related to the business. I would say that would not be the best way to show their insurance information, because they're getting this big giant insurance number that doesn't really tell them the story. And that's what financial reporting is all about. Not storytelling, it's not story time, but telling the proper story to the reader, whether you as the business owner, anybody who is involved in your business that needs to understand how you're performing versus KPIs. If you hadn't heard that before, it's key performance indicators. Any of those things that happen, these reports need to be able to tell the story clearly. So that's why this is an example of things that are, like I said, what we consider bad examples. Let's see here. I know I had some other notes written down about the different versions of things. Yeah, for getting business funding, or let's talk about payroll. I'll go back to that. It was a very good example, very clear example. Another issue with this chart of accounts is they're recording so much information about payroll, it's actually not helpful, because they're actually tracking every tax, to the point where every payroll tax, every piece of it, payroll can be very, and they, of course, they have a lot going on with 401k and matching expenses and employee contributions and insurance. They've got so much going on. This is what's important here. Employee benefits, that's what's important. How much are they spending on the benefits for their employees that year? How much are they spending on taxes? That's got to be just what's left over, what it costs them, and sometimes, like I said, people can set up so much detail that it is not helpful. So that's a theme you'll hear me keep going back to when it comes to the P&L, in terms of finding the sweet spot. When it comes to that particular issue of having having independent contractors, and when is it the right time to make them into employees? What that boils down to is very simply being able to look at the having simple tracking on their P&L. For example, here's consulting other. This is a category that would be used for independent contractors, and being able to compare that to what area they're working in. Again, if we have more detail here about the income, that's important. A general idea of income, or comparing the expense to what the total expenses are. In this case, their total expenses are this number down here. The other thing that I always would look at with anybody is to understand, how does their payroll compare to their total? This report doesn't have it. I would have to generate a report again, but with QuickBooks, let me go to that. With QuickBooks, when you generate a report, when we generate profit and loss, right? You have the ability to show not only the totals for the time period, whatever it happens to be, but also to add, hold on, there's some compare periods. Here we go. Show the percentage of expense, for example, in this case, I'm talking about, or percentage of a previous year, or whatever the case may be. In this case, I'm talking about percentage of expense when it comes to, let's do a better time period. Last fiscal year, so that we see a full time period. Cash, I'm running the report. Okay, good. So when it comes to labor, it shows as a percentage. Here's labor as a percentage of the total of expense. So this is the dollar amount for labor here. This is the total expense for the time period. It's 27%. Now, if somebody were to ask me, can I afford to put them onto payroll? I would look at this number right away and say, well, most businesses, when they're running payroll, human resources is their top cost. Most. When they're fully formed, if they're renting space like an office or something like that, that's breaking down these days, and a lot more mobility and a lot less cost for rent. But in that way, the money that businesses aren't spending rent, they're spending on people. Everybody may be mobile, working mobile and scattered, but that's what's happening more and more these days. Assuming that they were profitable, I would say they definitely can move these people over to payroll, especially because it doesn't get close enough to what I call like the third rail of labor costs, which is 50%. Many, if not most, small businesses, unless they're doing something that is incredibly profitable, usually if they're service-based or if they're restaurant-based, labor is so much a part of what they do. Usually their labor costs will be roughly somewhere between 45 and 50% of their overall expense. And so go ahead.
Dan, yep. I need to ask you a clarifying question.
Yes.
You've been doing this for years, 19 years.
Yep.
So you know what this should look like. If I am a solo entrepreneur running my own business, how can I possibly have anything to compare it to and know whether my numbers are out of whack or not?
Well, hopefully you're working with a CPA to do your taxes every year. They're always going to be the first person to tell you, we need to talk about this if there's something that's really out of whack. Obviously, anybody that's coming through the EforAll program is getting a good education on the front end about how to track what they're doing. Like I said in the beginning, there's no final wrong or right answer. There is just how you can best understand and manage what's flowing through your business. The good news is that QuickBooks will always, when you start a new file with them, they'll always interview you. They'll ask you what kind of business you have, and they'll ask you maybe some subcategories of that question. And when you start a QuickBooks file, it'll already have a preset recommended set chart of accounts for you. So it's not something that you need to create from scratch. and B, it's something that you can use, get started with and use, and as you use it, it can, you can customize it and optimize it over time. Always going to a professional like myself, or working with your CPA, whoever is involved with what you're doing when you started, or as you've grown and changed and gone to the next level, you'll need, more robust resources behind you. They're going to help you with that. I'm going to help you with that, or people like me will help you with that. At the end of the day, like I said, most importantly, the CPA is going to be your first and or last line of defense, because they're the ones, they know full well what the code is and what kind of expenses are properly deductible, et cetera, et cetera. And if they see anything or come across anything that doesn't make sense, they're going to get clarity from you before putting something down on.
But not every CPA is an active consultant the way you're thinking about it, right? Some of them are literally just doing your taxes. So does it behoove you to work with an advisor? I mean, I'm not, selling your services though.
Yes.
Because honestly, I've never worked with a CPA who said to me, what percentage of your costs is going to this or that? I mean, they just report it and make sure you're accurately paying taxes.
That's
they
right.
Don't necessarily dig in. That
is a common issue. Some CPAs are better equipped to help support growing businesses and entrepreneurs. Many of them are there to help with the basics. Many business owners, I will say as well, are oftentimes hesitant to engage their CPAs because, paying taxes is not fun. It's one more bill to have to pay, and it's something that people naturally put off. At least, starting with your CPA, and if they're not helpful to you, I wouldn't say you have to find a new one, but having somebody like me, or having somebody who's, if you have partners in your business and you're comfortable with them, they're in a position where it makes sense for them to see these type of numbers. They should be, we're here to help. Absolutely. We're here to help. And having people who are comfortable with finances makes everything easier. Aside from being the founder of Ms. Management, my wife is also the CFO of a small business, and they're an event business. And because she's so fluent, the kind of questions that they would have normally need to ask outside sources, they don't have to ask. So when it comes to things like looking for funding or applying to be a minority and women-owned business and those kind of things, they're already in her wheelhouse. But that's why she was hired or brought in as a partner to be a CFO for this business when it was conceived. So everybody has a different path, but working with a finance professional who is in a position to communicate and consult, but again, most CPAs are willing to do it, especially when when you're at the beginning, you're on the front end. They'll give you some basic information as long as it's not tax time. Now's a perfect time to talk to a CPA if they're not on vacation. But most of them took a vacation after the tax deadlines in April and into May. And now they're doing the preparation for everybody who filed their extensions, because the next deadlines are coming up in September and October. So there are good times.
And if you think your CPA can't help you, it may be that you've just never asked. And you certainly should start with somebody who does understand your business and say, do these numbers make sense? Do you see something out of whack? Should I be buying my supplies wholesale because I'm paying too much as for cost of goods, or whatever it is? And theoretically, that will be helpful. Of course, we'll give you Dan's information before the call is over. And it's not just Dan. There are plenty of people, and I know a lot of EforAll mentors will help you with this because they're very familiar with it. But if you don't have a point of comparison, you won't know, wow, why is your payroll processing 2%? It should be 1.5%. I didn't know. If you didn't know, you didn't know, right? So having somebody who can help give you some judgment on that is really helpful.
Yeah. And, having using a tool like QuickBooks, as you said on the top of this program, Deborah, it's ubiquitous. It's everywhere. They've done a very good job of making themselves more and more user friendly, more and more mobile and agile, and what's the word I'm looking for? Optimized for the startup, the entrepreneur, to do it all yourself. There is a whole world, and QuickBooks also does a very good job of trying to sell to you as well. And I'm not going to say good or bad. QuickBooks will always offer you, especially nowadays, because the technology is so good, they'll have a button that you can click when you log into it for, find a CPA or find a bookkeeper near you to help you with it. This file here is not getting a lot of that right now, which is good. But it's very common that once you're in the QuickBooks system and you're using them, they want to help you find the people to help you. So you have lots of ways to go. But it is important, absolutely, that you have a very tight team, at least a CPA who gives you good feedback and direction. And if they don't, then a bookkeeper or other consultant like myself is going to be imperative, even if it's every now and then kind of a thing. Again, if you've been operating for a while and everything's going well, then everything's going well. But if you want to, like anything else, if you just want to, check the lay of the land or get another set of eyes on things, we all can get, so used to doing things the same way. And suddenly there's a whole other way of doing things that we have not been made aware of yet. And that's, just part of staying current and staying mobile, staying agile, and and keeping aware of what's new and happening to know that you have the best things running for you, the best tools available to you.
Can I ask a really dumb question? It's been a long time since I ran my own small business, and it used to be that you went to Costco and you bought a disc, and that was going to run your QuickBooks for you. And it was what I call the local version. And now, is everybody online now? Is that the only version you can get?
No, not everybody, and most people who are solo entrepreneurs or running very small, I call micro businesses, they're mostly moving to online because it's so much easier also for their accountants to have access and to be able to look at what they're doing at any given time, and to be helpful to them. So it makes things more helpful to be using QuickBooks Online for that reason. But no, the desktop version is, these are very powerful programs. They even just the what we're talking about in today's webinar is just a tiny little slice off the top of what and how it can do. It's a big, beautiful database that captures everything. There's a couple of more points that I will touch on before we move into the Q&A portion about QuickBooks that are so important and helpful. And that is that, again, which I'll get off into that in a minute. But basically, QuickBooks Online is not the only way, but it has become the best way. I think of all my clients, there's only one anymore that I use the desktop version for, and they're the biggest client of mine, and they have one of the higher level versions of the desktop program because they're such a large client. They have so much activity in so many different places. It's too complex for them to break out to move into using QuickBooks Online alone. But many, all of my other clients we're using online. It's better for us in terms of working together. And it's better that their accountant has direct access to it, so they have opportunity to see what they need to see in real time, knowing that I've done my part. And that's the other thing to talk about with all of this, is that the most important thing is that you have the right rhythm in terms of how often to reconcile your accounts. What am I even talking about? That balancing your checkbook. We all know from the beginning of our independent financial lives, we have to balance our checkbook. Not all of us do it. That's okay. In our business, we need to definitely balance our checkbook, reconcile our checking account and our credit card accounts and our lines of credit, all of the important assets we need to reconcile so that we know for a fact we are reporting correctly. There's many reasons why that's important. The obvious ones are you want to make sure you report all of your income to the IRS, because if you underreport your income, that's the worst thing you can do. You can make errors and mistakes on your expenses, but don't make errors and mistakes on your income. And when money moves in and out of a business, sometimes it's all income and sometimes it's not all income, especially with micro businesses where they can be seasonal. And sometimes people need you put their own money in as a bridge, knowing that there's going to be a big payoff because there's some large accounts waiting to pay, and it's going to take them 2 or 3 more months longer than they were supposed to, or whatever the case may be. But also with all of the benefits of for those who needed and were able to take advantage of the different programs post-COVID, the PPP and the EIDL and state grants and other different types of programs. That's also important that those things are put in their proper place. And the reconciling is what makes sure that on a periodic basis, everything's in its proper place. As an ongoing, anybody that I work with on an ongoing basis, they're my client and I'm on an ongoing retainer with them. I reconcile their accounts every month by the 15th of the month, give or take. They know that when they look at the previous month, that's really what it is. Even if we get to the end of the year and we recognize, well, that wasn't exactly right, we got to fix a little bit here, a little bit there. For the most part, they know that the numbers they're looking at are real, and that's what helps them make those decisions. The other thing that I was going to go and talk about a little bit and mention, I think I lost it. It's all right. We'll come back to it.
So while you're on that though, because my first question is, what reports should you run every month? Like, what would you look at after you reconciled?
That is a great question. And most commonly for those clients of mine that are want to see it every month and want to pay attention to what's going on, we're usually running a profit and loss every month. We're usually running the balance sheet, and we're usually running open receivables. Different businesses run in different ways, so it depends on how you sell. I have some clients that, again, they are doing services, so they're just sending invoices on occasion, or they have monthly. I have one client that's just the first of the month, 4 invoices go out, and that's their income for the month every month, and they just wait to get paid, and it all rolls on from that. Some people are, if you're selling products, if you have a kiosk or a small storefront, you're not tracking your future receivables, because it's all a sale doesn't happen until it happens in real time. For people that do online ordering, and let's say they sell clothing or something like that, and they sell it through a platform like Shopify or something like that, some of those programs will interact with QuickBooks so that the proper information is getting into the program. But knowing what people owe you is important. And if you're in a position where you don't pay people right away for what you owe them, then there's also the accounts payable instead of accounts receivable, accounts payable report. So that depends on your business and how you manage your cash and what is required at that time, what makes sense. There are lots and lots of reports that you can use to check different aspects, understand different aspects of the business. Again, and QuickBooks, as you can see here, it makes it very easy. These are business overviews. There's profit and loss from different points of view. This is what I was going to mention. This is the other part that I was going to mention about the general question of how QuickBooks can help. Here is a profit and loss by tag group. What is a tag group? Well, a tag group is one of a number of ways that QuickBooks lets you add additional fields of data. I will say to you all, don't use it. Be very careful unless you have somebody who is really focused, like an admin, that part of their job is to code things in QuickBooks, things can get really out of hand when you start adding more and more columns of data to have to track. But this is another way. Let's see, I have one client in particular.
So Dan, if we
Yeah, go
if we
ahead.
use that example of the person selling through farmers market, e-commerce, and
Mhm.
distributors, could those be the tags?
It is one way to do it. You know, when it comes to that original example, you definitely want to see your revenue. Tag group would be if you have both revenue and expenses that you want to be able to capture. And so if in that example that you're presenting, you know, a farmer's market, that somebody who uses farmers markets as a way of selling product wants to capture both the revenue and the expense, they can use that tag group. They can in that way even use that tag group to say, well, it's this specific farmer's market. Whereas the profit and loss will capture things in the general revenue, farmers market revenue. The tag group will allow you to add an extra flag of data to track that allows you to be very specific.
So
client,
you could the Hudson one versus the Kinderhook one and see which one is making you money. I got it.
Right. The client that I have that uses the tag groups is a interior decorator, and that she uses the tag groups to track everything that is a purchase that she's made for that particular job, so that particular address. So 123 Main Street has its one tag, and 500 Park Avenue has the one tag, and whatever, so that as the expenses are being coded, they're going to be able to say, here's the full report at the end of the job, for that address, these are all the things, and it covers not just months, it could be over a year. So it's different from looking at the business side. It's looking at it just on a job by job basis. And that's what QuickBooks does, is try to find all the different ways that this information can be helpful to you and make it, put it in a way that's presentable.
Yeah, I want to open it up to questions in a minute, but I think the lesson that I'm getting is, if you set it up right, it can be really informative, or it could be overwhelming. And it's a fine line, and it depends kind of how you use it and what kind of advisors and how often you bother to look at it, right?
When you start using QuickBooks, there should be at least one session you have with your financial professional or an advisor, a friend who's knowledgeable, whatever, that looks at that chart of accounts with you. If you set it up right at the beginning, it will pay off for you over time. Absolutely. Garbage in, garbage out is a difficulty. And a lot of times when I get called in to help a new client, it's because their CPA has said, enough. We need to get somebody to help you clean this up. Clean it up.
Is it as big a job as I think it is to go backwards and reclassify?
Well, that's always part of the conversation, to say, is this worth going backwards, or is it all about just preparing for the future? That the future is done better, because there are ways to move things and to reclassify things without, you're not getting rid of it. You're just gonna, have what used to be in this crazy place. Oh, it's gonna now be renamed and be in a better place. And so, you usually, unless depending on the time of the year, if it's January or February, it's still okay. You can still reset the year. But if it's October or November, you're really just preparing for next year.
Right.
Exactly. Yeah.
All right. Why don't you stop sharing, and Allison, you can stop recording. And I know that Kimberly